Coin, now we know it's risk on in the stock market, right? Risk on in the stock market. So the question I have is, well, does that mean risk on in Bitcoin? I would generally say it is a positive for Bitcoin. Certainly the stock market going up and more rate cuts is not a negative for Bitcoin. And Bitcoin is pushing through this resistance line here. Now we have to see where Bitcoin closes. I will point this out. All right, the mere fact that Bitcoin is not at its all-time highs and the S&P is slated to make a new all-time high today is a little concerning for Bitcoin, but
Gareth Bitcoin and Crypto is into Bitcoin and crypto insights, sharing predictions and strategies. Let's watch together to uncover his market outlook.
again, maybe Bitcoin plays catch up. We don't know, right? Bitcoin has a weird history of big moves in very short amount of times. But again, generally you would assume, if someone told me, hey, S&P is going to be making a new all-time high today, in my head, I'd be like, well, Bitcoin should probably be doing the same. It's not. But again, let's give it a little bit more time over the weekend into next week to see. And first step is to close above this 12,500 level. That's a level I've given you guys. We talked about where that level came from. Support, breakdown, resistance, and now trying to push through. If it closes above 12,500, it opens the door to go to about 17,000, this high pivot. And if that gets taken out, then 123-ish to 124,000 on the upside. All right, now if it fails to close above, that would be very concerning to me. And I say that because, again, this is the perfect environment for Bitcoin to push up. If it can't and doesn't get above on a closing basis, 112,500, that would be kind of a red flag for Bitcoin. Quickly looking at ETH today, let's take a look. ETH still holding its uptrend here. You can see the trend line going back to June. So that is still holding. If that breaks, it's going to fall probably to 38.70. But as long as this trend line holds, you favor the upside with a potential move to the high end of this longer term trend line, which right now would be around 5,300, 5,280, somewhere in that vicinity. That would be your upside favoring. So right now, the chart on ETH remains bullish as long as this trend line does not get a daily close below.
Ethereum's price may have slipped 5% after disappointing U.S. jobs data rattled both crypto and traditional markets, but the bigger picture suggests resilience. The drop triggered heavy liquidations of bullish positions and sparked speculation about whether ETH could fall back toward $4,000. Yet the data shows that much of this pressure comes from short-term macro uncertainty, rather than a true bearish shift. Derivatives markets tell part of the story. Futures premiums have dipped below neutral levels, reflecting cautious trader positioning. And U.S. Ethereum ETFs have seen $505 million in outflows over the past week. Still, options data shows no sign of panic. The delta skew sits at 4%, well under fear thresholds, meaning traders aren't rushing to hedge aggressively. On-chain activity paints a far more optimistic picture. Ethereum transactions surged 32% in the past month. Active addresses climbed, and total value locked to reach nearly $100 billion, with major protocols seeing double-digit growth. With Ethereum still dominating decentralized finance and stablecoin markets showing only mild selling pressure, ETH looks better positioned than the headlines suggest. Despite global economic jitters, the foundation for a recovery remains strong.
Gold is pushing up, so we are seeing gold push up here just a little bit. I did take a majority of my GDX short off the table yesterday, and I will add back today if GDX pushes up substantially. Gold again pushing higher nicely here, so nice little move to the upside there. And again, really at this point, we knew we confirmed on gold, closed above, confirmed. And then you got this kind of pseudo retrace to the scene of the crime, which was amazing that it dipped that quickly. And now on this obviously dollar going down, we are seeing a bounce in gold and gold grinding up. But again, usually, and I'll say this, guys, generally speaking, gold and the stock market don't continue to go up together. All right, that's a little unusual. In other words, something at some point has to break, meaning that either the stock market pulls back and goes down and gold continues to go up, or the market continues to go up and gold pulls back. So this is a very unusual time in the markets because, again, you're seeing gold and the stock market literally leg together at new all-time highs and continue to do so. So just keep that in the back of your mind that something has to break there at some point. We don't know when, but at some point that does have to break. Okay, silver real quick here. Let's go to silver. Silver also up. We did also close above and confirm. So again, we know this is now a confirmed support. And I still think silver has a shot at going to $48 to $50 an ounce just based on this breakout and momentum in playing catch up to gold. Oil, we know oil got rejected off that level, and look at oil fall, folks. And again, this is so interesting, right? Because the theory would go that more Fed rate cuts, mind you, would mean that the Fed, again, more rate cuts by the Fed means that the economy should be stimulated, which means that we should see a demand increase for oil. The oil markets and the oil traders are not telling us that. And I don't know, again, if I'm making a mountain out of a molehill yet, or if, it's just something I want to continue to follow. But why is oil going down? Yes, you could say supply, but yeah, we've known about the supply issue. Now, the chart's been telling us it wants to go down to this gap fill at around $60.65. But I just think it's interesting that oil is selling off pretty substantially today, 2%, in fact, which is a big move for oil. And it's the third day down in a row. Yet the stock market is rejoicing because the Fed's cutting rates and the economy still appears to be reasonably strong.
Ron Paul, the former U.S. presidential candidate and longtime libertarian voice, has once again put Bitcoin at the center of political debate. At 90 years old, Paul remains outspoken about his belief that Bitcoin should be legal in the United States and allowed to compete freely with the dollar. For decades, Paul has argued for smaller government, free markets, and decentralization, and his support for Bitcoin fits perfectly with that philosophy. To him and many libertarians, crypto represents not just money, but freedom, a challenge to the Federal Reserve and its control over monetary policy. Bitcoin's origins in 2008 during the financial crisis made it a natural rallying point for privacy advocates and free market thinkers who wanted an alternative to government-backed currencies. Paul's vision of letting Bitcoin stand on equal footing with the dollar echoes that same spirit of borderless trade and individual choice. His son, Senator Rand Paul, has carried that torch forward, even openly questioning whether cryptocurrencies could eventually replace the US dollar as the world's reserve currency. With crypto adoption rising and political divisions growing, the Paul family stance ensures Bitcoin remains a powerful topic in America's economic future. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Sella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.